Meghan Shue of the Wilmington Trust is with us as well. All right, so earnings season is off and running now. Markets having a little bit of an issue today. How do you feel about things?
Yeah, I feel pretty good starting off the new year. We ended the year on a pretty solid note, and we're looking at expectations for really pretty robust earnings in 2026. I think the one red flag that we're sort of watching is pretty significant weakness, or at least stalling in the labor market. And that is, of course, sort of complicated by reduced inflows into the labor market, reduced immigration. But when we look at some of the weakness in private payrolls, it is a little bit concerning. I think what we're expecting to see is a little bit of softness in the first half of the year with some recovery in the second half of the year. And the market's probably going to be looking through that to continued strong earnings in 2027. So we're staying fully allocated to equities, but focusing on higher quality within that space.
Pretty confident on what earnings are going to deliver this season?
Well, earnings have continued to surprise to the upside, and we've seen earnings continually get revised up, strong beats. So I think if you look at 2026 expectations for, call it 13% earnings growth, it's very possible that we see something closer to 14, 15% earnings growth. I don't think you're going to get a lot of multiple expansion from the market, but that's okay. We're obviously pretty fully priced there with rich valuations. But what's been encouraging, in my view, has been that tech valuations have not increased materially over the past, call it 2 years. They basically just moved sideways because earnings growth has been so strong. I think you're going to see a little bit of a passing of the baton, better earnings growth from non-tech companies and a little bit of convergence there. But it continues to be, I think, a story about a gradually broadening equity market participation.
Oh, I was going to ask you about that next. So you believe what we've seen to start the year has some staying power in terms of the broadening of the market?
Yeah, I think the underlying earnings trend speaks to better improvement coming from some of the non-tech parts of the market, but you're still looking at really robust earnings growth and, again, higher quality. I think the thing to watch on tech is that the second half of last year, investors definitely became more attuned to tapping the debt markets. I don't really expect that to reverse. It's just all about the trajectory of call it the hyperscalers using debt to fund CapEx and making sure that those CapEx projections remain in check and don't get out of control.
All right.